My name is Jeff Scott, and I suspect some of you know me through my videos. Some I've had the opportunity to meet live at HGSI and other meetings, and some of you, including a couple of people I see from overseas, have actually come to my live meetings. The format for today is not to rehash what I did yesterday in my weekend review, so I'm not going to go through the slides of the market. I may look at a couple of things. The format is really to show you how I pick stocks to trade and while I trade with a full-time job, and we'll go into more of that in a couple minutes. You should have a box that says questions, and I will be trying to answer your questions as they come up. I'm very informal. I suspect you're all muted, and this is being recorded. But if you have a question, please type them into the question box, and I will definitely answer them in the order that I want to. I guess I should say it that way. I have a couple of poll questions that I'll ask as we get going, and other than that, it's freestyle. Today was a challenging day in the market for some. Certainly biotech got hammered today, and maybe I'll talk about that at some point of why healthcare is under some pressure. But let's go ahead and let's officially start this off. So let me get into the beginning here. There are a couple of slides. I couldn't do a presentation without them either here or in my regular life. All right, this is unfortunately what happens. Let me see if I can fix this. All right.
Hey, Jeff.
Yes.
We're seeing the screen of the, I guess it was Vietnam.
Oh, all right, so it did switch screens. Let me switch that, okay. All right, so which screen are you seeing now?
Outperforming the markets by trading pullbacks.
Perfect, thank you, and that's why we have George here to keep me honest. That base screen is Ho Long Bay in Vietnam, which is just a phenomenal place. Are you still seeing my outperforming now?
Yes.
Okay, we're good. All right. So I work hard, but I like to trade. I've been trading, as I said, since probably 1990, 91, when I started learning how to trade and how to blow up accounts by listening to people who knew less than I did. I met Ian Woodward in circa 1995-ish when he was leaving Telescan and doing some talks on the road, and followed Ian until his death. And I really like what I learned from him, and I'll show you how I apply it. But the key to this program is the fact that I do this while working full time. As always, this is for educational purposes only. Anything I recommend is in the spirit of education. It should not be taken as investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I was included in that early on in my career. I am independent for HGSI this year and my other tools, and nobody pays me or gives me trinkets, so I say good things about their product. You'll have heard over the last couple of weeks or seen that I have a few indicators in HGSI. I paid to program those in, and hopefully we'll be coming out with a add-on that you'll be able to subscribe to. More about that to come. And obviously trading involves risk, and you alone are solely responsible. When I do education, I'll just have a couple of background slides that you've probably seen before. I title my education Be Your Own Guru, and I learned from smart people. I took that, I mashed it together, and I came up with what works for me. What I do doesn't necessarily work for you, doesn't have to work for you, but I hope that you learn from smart people too, and you develop a style that makes you money. Here's Ian up here. What a wonderful person he was. In Yiddish, they have a word called mensch, and Ian was truly a mensch, and I learned so much from him. William O'Neill Cancelim is where it started for me. It started with Cancelim for Ian as well. He made Cancelim better, and then with George, they started HGSI or developed HGSI and took Cancelim to the computer and really changed how I traded and how I found stocks. You all probably know Ron Brown. Ron started in the audience and became Ian's partner. What a lucky guy to have done that and spent so much time with Ian. Gil Morales and Chris Katcher, the O'Neill disciples, ex-money managers of O'Neill, the kings of pocket pivot and Bible gap ups. The lower left-hand corner is my buddy George Lee, who time to time I'll be on the road with George and we'll do some trading programs or some different things. He's a great guy. If you ever have a chance to listen to him, I highly recommend it. John Person, I mean, finding stocks is one thing. How do you take a stock that you find on a list and trade it? And I really learned how to trade from John, whether it's stocks or options, futures, which we're not going to talk about today. He has some cool indicators, some that are on Thinkorswim, some that you have to purchase for TradeStation. And Van Tharp, the king of position size and money management. And then Sagar, who I actually got to break bread with in Thailand this year from Superior Profit. He's got some really cool stuff too. And some of you were smart enough to get your free trial that turned into a year's worth of his programming that I put up on the board. And I don't usually bring another program, certainly a competitive program, onto the HGSI board. But if I use it, I like to let people know. And Sagar offered a year's worth to the program at no cost as a plug-in to TradeStation or Metastock. I have TradeStation and Thinkorswim. We're going to use them today if my computer doesn't fart out on me. Genesis is a great program. You can do some scanning and things in there, but I wouldn't go out and buy it if I didn't already have it today, since you can do so much with the free platforms. HGSI is how I do my analytics, HedgeRater to supplement it. And then I use various other tools as listed here. But if I had to be on a desert isle that had high-speed internet, of course, usually it's called a cruise ship with my wife, TradeStation, Thinkorswim, and HGSI is all I need to make money when I'm on the trip. Here is the website. You all know that. If for some reason you came in through YouTube and don't subscribe, the free 30-day trial, unless George changed the rules, doesn't even ask for a credit card, which is bizarre in this day. And then under investing strategies, of which you don't even have to be registered to use, you'll see hundreds of movies by myself and Ron Brown. Once again, I always start with this picture because where are we in this market? It sure feels like we're back on this right shoulder here. And if that's the case, then we may need to change our behavior. But every time it feels like this market is getting ready to roll over, we take another leg up. It certainly was like this in May, and then the Fed changed its tune and started talking about rate cuts, and the market went up. There were some people that thought we had 50 basis points coming at the end of this month. Today, they realize it's 25 or 0, and we had a down day. I still think we go higher. The question is how much we go further down. So reality, we're probably not at the red circle. We're not at the green circle. But if you were able to cut off the top of this cycle pattern, we're just seeming to go back and forth. And one of these days, sort of in a Darvas box, we either break out to more new highs, which we did last week, or we'll get that pullback. So when I get into more uncertain times, and clearly today we're at more uncertain times than we were a week or two ago, I start to raise some cash and start to sell some premium. As I said on my video over the weekend, I'm still overly long. I did cover some of my short put spreads today that I used to pay for my positions because I didn't want to carry things that would cost me 10, 20, 30 cents a spread to close out into a market that might pull back. Of course, the minute I closed all those, the market started bouncing today. I have a large account. When I went out to dinner with Cigar, that's one of the first things he brought up with me. Everybody, they like you because you show them your numbers and you trade a big account. Well, I have multiple accounts. I show you one of my accounts. I have some long-term accounts that are not actively traded. And frankly, I've got enough that I put it elsewhere. Not that I don't want to manage all my money, but you know, I'm 61. God willing, I live a long time. My wife's a little bit younger, but she's still my first wife, so not that much younger. And she will only be I only have her as my wife, God willing. And if something happened to me, somebody else has to manage the money. So I've got some money managers, and they're sort of like, I keep cutting them if they don't perform, and hopefully I'll end up with a couple that are really good. And when I go, they'll take over. I swing trade stocks and options. I typically look at a few week time frame, but that can be much longer if the market's in my favor. I'm a top-down guy. I'll show you some old Ian slides that support why I do it that way. Yes, I can trade futures, and I've been playing with John Person's algo tool. Whole different game, and I'm not going to talk about that today. I think it's much more work to be an active trader and to trade futures and be a day trader. And I like to have a life. My wife might question that sometimes, but I like to have a life. I want to find stocks in long-term uptrends that have pulled back to support. A long-term uptrend that pulls back to support. That's my play. I'm still a sucker for earnings, but perhaps a lot more of a sucker than I used to be. And by that I mean, if I have a stock that has a multiple of 20 and a growth rate at 60, I'm excited because if that multiple stays the same, that stock price has to go up if I make those new earnings. And if my growth rate is that much more than multiple, I may get multiple expansion. I also realize that if I stick with that idea, I'll miss a lot of stocks that have no earnings or no earnings growth rate that become huge leaders in the market, and then the earnings come and catch up. Think Amazon until recently. So I've had to adjust that. And technicals now rule fundamentals in my universe. Once I find a stock that meets my criteria for a setup, I look for a specific momentum indicator to trigger a trade. Like John Carter, I like squeezes. Now, to me, a squeeze is when the Bollinger Band contracts within the Keltner channels. And when that happens, it's sort of like a coiling spring. Now, that spring could stay coiled for weeks and months and years, or it could open. Now, when that spring opens, you have force to the upside and force to the downside. So you don't know which way it's going to go. But if I have a stock in an uptrend that pulls back to support, that starts to squeeze, now I'm going to start to scan for those stocks and find them that have momentum so I know it's coming out of the squeeze, and that's what I want to go and target. Once I find the stock that meets my criteria, I look for my triggers. And I'll go through a little bit of that work tonight. I set here's my price to buy, and then immediately put on a stop, and then I'll talk a little bit about my stop management, and you'll see why I like pullbacks. It's much easier from a risk perspective. And I own and have tried almost every program on the market, and I use a handful of them. Now, I talk about a lot of indicators somewhere out on the web and on the HGSI site. I have my vocabulary webinars, and if you email me at some point, I'll be happy to send you a link. So I define all these, but these are the indicators that we learn from Ian and others. I use these indicators to help me on the top find what does a stock look like that's pulled back to support. I mentioned the squeeze. I'll talk about free parking in a second. I will talk about the HCD, which I think is the best signal that I've ever seen, and that's John Person's. He's the one that basically invented it, I guess. Certainly is the one that has made it popular. And then I'm going to talk about the momentum indicators that I use and how I use them down here. So again, if you're new to me and you have questions about the vocabulary, then it's simple. Reach out to me through email and I'll send you a video of my vocabulary. Now, one of the things that I talk about when I do live trading is market context matters, and that we learned this from Ian. In fact, the slide that proves this is Ian's slide, and you'll see that in a few minutes. The market drives at least half of the stock movement. Most of you lost money today, unless you were short. I don't care what stocks you pick. I'm sure you have great stocks, but if the market is down 100 points on the Dow, then probably the majority of stocks are down as well. Now, the second thing that matters is industry group. If you are long an industry group that is out of favor, then even if the market goes up, you probably are not going to perform as well as the market. So you want to have the industry group and the market, and then stock picking comes in. The funny thing is we spend all of our time stock picking. Most of the sites that I listen to pick stocks. I want to understand the first two things, and there's no better tool in the market than HGSI for that. The market determines my stance. I find my favorite setups in top industries. I do bottoms-up scannings for top stocks. I'll show you that tonight. And I use different tools to figure out what's working. So those who've seen this before, you can go to sleep for a minute. And those that haven't, this is an amazing slide. And in fact, Ian used to say in the bottoms, this is the most important chart in his whole presentations. And we're just a couple of things. Ian gave me permission to use his slides, and I leave them the same format I got them. When you see the green, yellow, red up in the upper left-hand corner and the white background, this was made by the master himself and just copied by me. Ian would get into his great English accent and would talk about his monthly meetings in the Palos Verdes Estates Library. And at that meeting, he'd have the same group of smart traders month over month, year over year. And they eventually decided that they would track their picks. And what this slide shows that over a 15-month period of time, that when the market was good, oh, let me find where am I? I keep losing, here it is, get back here. When the market was good, they had incredible 20-day and 40-day performance on their stock picks. But the next part's even more important. No matter how good they were, that's impressive, isn't it? In a weak market, they lost money. So to me, there's a couple of messages on this slide. Number one, whether you're a great stock picker or not, you make money in a strong market. And as a stock picker, it's very difficult to make money in a weak market. Even great people, very smart people using the same techniques that worked in a strong market are not going to do well in a weak market. The other thing is maybe being a long-term trader doesn't work because you could see between 20 and 40 days, at least in the top three buckets, we saw that the performance dropped over time. So you get your pop, maybe you should take your profits and maybe let a little bit ride, which is what I do, because most of your gain comes right away. The other message here is that in a bad market, you're not going to get better over time. So if the market is a horrible bear market, holding your 20-day 32% loss, saying I'm going to get better over time is probably not a way to make money and to maintain your capital. So top-down matters, and that's why in my weekend reviews, I spend 30 minutes of the 50 minutes looking at the market. Now, one thing that Ian taught us, and this is a chart I think I put together, well, I put this together as an example. I'm not sure if Ian was still living at this time, but he talked so often about free parking. And I guess living in a small town in California on the ocean with tons of tourists, they didn't have a whole lot of free parking. But if you could get free parking, you wanted to take it. Well, we have free parking in the world of HGSI, in the world of stock trading, and free parking is the 50-day moving average, which is in blue. The stock in question is Micron, which broke out in January of 2013 and ran over the next year from a price of about 7 up to 24 in a year and a half. And, you know, where do you want to be buying the stock? Well, yeah, I want to be buying the stock right here. And if you think about Tandem, which I may look at today, and if any of you were lucky enough to jump on that last year, you had a hell of a run because it ran from 6 when I gave it to you to 72, 76, I think, when it topped out. And I think it's going to go again. But I bought Tandem when it did this. Here would be a good point, pullback into the 50. Now, if there was a way to find this with momentum, that would have been good. Yeah, this would have been okay. This one would have been great. Well, you don't buy and ignore, you put stops on. this would have been a great buying opportunity. You may not have got it because it didn't drop all the way, but my message here is on a strong stock that's going up, why don't you scan for stocks that are pulling back into this 50-day moving average and build a list of them and buy them when they break out? That's what I do. We'll talk about that tonight. Here's one of my secret weapons, and this, as you could, this is John Person's high close doji, and you could see the personsplanet.com. So just to be clear, it is not in Thinkorswim. It is in his TradeStation for sale package in his lifetime, which I know many of my friends at HGSI actually own it. And it's not in HGSI per se with the rules. A high close doji says your stock is sideways or in a downtrend. A doji forms. Here there was 3 or 4 dojis. And that within 3 bars of that doji, 1, 2, 3, you take out the high of the doji bar. And that is what John Person, as I've interpreted, has defined as a high close doji. Sometimes I get confused, 2 or 3 bars, but right now we'll leave that alone. So I scan for patterns where you get a doji bar and then you get this. This is a reversal. This is a trading system unto itself. Why is it a trading system? Because once I got that high close doji formed, I will set a buy at the high of the high close doji for the next day. And I'm a working man, so I'm going to say when I'm at work, if the stock trades above the high of the prior day or the close of the prior day, I want to buy it. And I'm going to set my stop right down here at the bottom of the doji. I can then figure out what my risk is, the dollars and cents between where I'm going to buy it and where my stop is. And then I can look at how much I'm willing to risk per trade, and it will tell me how many shares to buy. That's how I look at every trade. Where do I buy it? I buy the next day if it takes out X. Where's my stop? Sometimes I'll look at the lowest bar in the last 4 days, or if there's a obvious support from a pivot or a moving average, or in the case of this trading system, the bottom of the doji bar. And I'll go to work and know that if the stock traded up the next day, I filled it and I made some money. Now there's other things here. This little blue dot is his PPS buy signal, which is free on Thinkorswim. And so here you've got the combination, really the holy grail in my book. You got a stock that's in a downtrend. It ends in a series of dojis. You have a high close doji that occurs as it takes out the high of the doji bar. On the same day that you get a PPS buy signal occurring. And down here is on balance volume. And here is a trend line. And on the same day that OBV broke its downtrend. And that is a guaranteed, as much as I can, winner of a trade. And so I'll show you how I find those and how I trade them. So those that have been on my webinars, and this isn't even the latest version of my chart, but it's pretty close, wonder how could anybody use so many indicators and have so many indicators on a single chart. And if I was to start a trading company or an education company, which I don't want to work that hard, so that's not going to happen, I would call it Trade the Right Edge. I'm sure somebody else already has that name. And why would I call it Trade the Right Edge? Because what can I tell by looking down here? The first bar here is the Hindenburg. I could see that the market was in trouble, but we stopped having those signals. Okay. The Bongo daily and weekly, these are some momentum indicators that created by myself and 4 or 5 others under Ian's tutelage. It looks at 3 different Wilder RSIs, how they line up and price in a moving average. And we found that they were very good, albeit late predictors of the market. So I know that Dave Steckler used to use them a lot, and he's a very good trader and would manage money professionally and trade ETFs. And it's a great market timing system. So I like to look up and see, is my weekly bond go green? Now, the other thing I know is if my weekly bond goes green and the daily goes red, then I'm pulling back on the short term. And that might be a way to scan for pullbacks in an uptrend. The next bar down is accumulation distribution. The brighter, I guess the darker the green, the better. The darker the red, the worse. And think of A, B, C, D, E, and IBD. Dark green A, light green B, yellow C, light red D, and dark red E. So I know if the stock's accumulating or distribution. The 13 and 2-day force, I'm getting away from the force, but like the Hindenburg, both taught me a little bit about momentum as well as a tool for finding pullbacks. Here, this line that's hard to see, and I do much better with this in TradeStation, and maybe someday get George to formulate it for me the way I like in HGSI. That's the high jump bar. I mean, Ian left some gifts to the world, and that's one of them. And it gives a way of reproducibly repeating and calculating how stretched the market is. And by golly, whenever you get to the top of the channel of the high jump bar, the market pulls back. So why would I want to buy stocks when the market is at the highest extension that it's been? If you watched my webinar this weekend, you saw that it was in the 94 to 97%. And I called out that we were probably going to see some sideways or a pullback. The red bars and the green bars in the high jump area are green candle lows and red candle highs. Yeah, I can see that on a chart, but it reminds me if something's happening. Then I've got viable gap ups. I got squeezes. I got mobile breakouts. This gray thing here is one of the amazing things of HGSI software. It's plotting the industry group strength on top of a chart of a stock. I then have my candles. You know what those are. The little dots, which are hard for you to see, are the Wilder PSAR dots. I've got my moving averages as listed here, my pocket pivots, my OBV, Eureka, and Phoenix in this window, and my volume bars and kahunas down here. All I got to do is look at that right edge, and I could say we have a new uptrend. We're accumulating. We had a mobile breakout from a squeeze. It looks like we broke out above the 50-day moving average on a kahuna. I don't even know what this stock did, but that's what I'm looking for. All this stuff is great information. I love it. I just need that right edge. So I trade on the right edge. Now, this isn't the brag session. I love doing this because I get them going at my live meetings. This is what I do. Here was Amberilla. I remember this one well because my wife and I were at a wedding in Ravenna, Italy, in the Amalfi Coast. And all I kept doing the whole time is checking my Amberilla price because damn if the stock wasn't peaking as I'm going out there. And here's a stock that we got into with 65, a 65 long. I got in with calls and puts when it was about 65. And what I do is different types of synthetics, which we'll talk about. I bought a 65 call. I sold a 60 put to pay for it. I invested $36,000 in it. Then I let the money roll, and over a period of that's supposed to be 6/9/15, but over a period of 3 months, I made $181,000 on my investment. Why? Because every time it pulled back, I bought more. And then I got the big run, I got stopped out, and that was the end of Amberilla to today. Horizon Pharmaceuticals, nothing. Then all of a sudden, just like with Tandem, a little nibble here in January. So I did a synthetic calls and puts, 100 contracts at 25, and I sold that profit for $78,000 for for a profit. I'd have to go back and see what I made on it, but it was a really good. I paid $33,000, sold it for $78. And what did I do? I bought the stock on pullbacks. Amazon. I have a big position in Amazon. I pay for it by doing this trade. I'm just going to show you one of the trades I did on it. So remember that right edge? No Hindenburg, so the markets are good. Weekly bongo's green. Daily bongo just went red, so the pullback must be over. It's in a squeeze. Forces are positive. My high jump is fine. I got a mobile breakout and a squeeze. I'm breaking out above that 50. This is my PSAR dot. I had a PSAR reversal. I had a pocket pivot, a Eureka, which I'll come back to in a second, and a Kahuna fired. This is it. I call it the Holy Grail for a reason. I want to buy. The stock's at $440 a share. It is. I'm like gonna burst here. I'm so excited when I see this. And then whatever I'm feeling, amplify it, because that green Eureka said the market just turned around. The Eureka is the HGSI equivalent of a follow-through day. And when I see a Eureka, it's telling me the market is reversing. When I see the bad one, the red and the maroon, I get nervous the market's pulling back. If I see a Eureka occurring after a big run, that's emotional exuberance to the upside. That's more of a sell signal than a buy signal. And if I see a, excuse me, a Phoenix, the red one, after a big drop off, that's usually over exuberance to the bottom and it's going to turn around. So what did I do on this trade? Let me set the math here. My arrowhead is on the day that I put the order in. And all I did was a simple synthetic. I bought 40 calls and sold 40 puts in this account. I paid $23,000. I sold it 2 weeks later for $324,000. And I took that money and I bought shares of Amazon on margin, which gave me about $500,000 worth of Amazon from a $23,000 investment. I do the same trade over and over again. I don't know how Visa turned out. I suspect it, or this is Sally Beauty Holdings. So here is a stock, a little bit deeper pullback than I would have wanted, but this is my story. The weekly bongo didn't turn green yet, so that's a negative, but I've got forces, I got mobile breakouts from a squeeze. I've got what looks to me like sort of a belt hold bar where it's a bullish engulfing, taking over the last couple of days. Down here, I've got a Kahuna, and that's a stock that I went long on as well. And this one here is Visa, run up, pull back, and here I am with weekly's green, squeeze. My new indicator, we'll just call it my buy one indicator, a Eureka and a Kahuna. I look for the same pattern over and over again. One of the things that George introduced, and there's no MOBO on this, I used my index graph chart, not my stock chart. George has put in these green dots and these red dots. That is not the PSAR running bigger. That is a chandelier stop, and I'll show you how I use it beyond just being a stop. World Fuel Services, even crappy companies, you can see the line here. This is when it's great. Couple Kahunas in a row, a Eureka in the market, a mobile breakout from the squeeze. Even though there was a Hindenburg, how do I resist? And you get your run. I want to find that pattern. May not find it every day, but that's the pattern I want. So let's go look at some charts and show you how I use HGSI, and then we'll talk about Florida. All right, so everything's going to go crazy for a few seconds. Let me let my screen reset as I come out of screen mode, and then I'm going to ask you, hold on, give it a second. Which slide screen are you seeing, George? Are you seeing the screen with HGSI, or are you guys seeing?
I'm seeing Vietnam.
Okay. Yeah, every time I switch resolution or do anything, so now you should be back to HGSI?
Yep.
Awesome. So let me ask a couple of questions. I've not done this before, but let's go ahead. Did the question show up or you can't see it? George?
I can see it.
Okay, just quick vote. Do you own HGSI, the software program? Yes, no, No, I don't own it. I'm on a trial. Let's do this quickly because I don't want to spend a lot of time on it, but I always have some questions to ask. And since I've never done this before, what do I need to do? You just have to click the radio button.
I think that's right. I've never done it either.
All right, so I'm not seeing anything except poll results. Oh, I have to open it. How do I open it? All right, well, we may have tried and failed.
It looks like it's closed, Jeffrey. You might have opened it and you closed it.
Yeah, I think that's what happens. Let me see if I don't know how we open it. I know we tried. All right, let me try the second one. I guess the message is you shouldn't try things the first time with an audience. All right, hide that one. All right, we'll make it quick. Do you watch my videos? Oh, I closed it right away. Now I know the problem. Hold on a second. All right. It was me, not you. All right, so we may give up on the polls. All right, I'll skip the polls for now. Let's go back and let's talk about finding some pullbacks and uptrends, which is what you're here for. And maybe I'll try the polls again, see if George can get them reset. Let me just open up the question box so I can see any questions that come in. Yeah, when I change the slides around, all right. Yeah, no one could vote. I screwed up. Good thing I'm better at making money and trading than I am running this thing. All right, so a couple of things. I do have a job. This is my company. It's called Integra Connect. It's a healthcare technology company. And just to prove that I'm not kidding you, I'm pulling something off the web. Not my favorite picture, but there I am, proof that I actually do exist and that I'm one of the founders of the company. That keeps me busy. Have I ever used AIQ yet? Larry, I'll come back to that one later. It's got some great market timing. And I know there's a book about where are your customers' yachts. And this is my yacht. And it's just proof of principle. You can manage your own money and get a yacht. You don't need somebody else to do it for you. Enough of that stuff. And let's do what you came here for. So I did an update right before we started. I don't usually do a lot of updates pre-market or before the market closes. Before I go there, I did wanted to show you, if you watched my webinar last night or yesterday or the weekend, you would have seen that I said that we were in trouble on the market because of the T2121 indicator. I can probably do this in HGSI. I just haven't figured out how or asked George how. What this is showing you is how many, the percentage of new highs versus new lows in using a 12-week or 3-month window. And almost like clockwork, every time we peak, the market sells off. Market sells off. Well, we hit the high jump bar for this over the weekend or over last week. In fact, it even got up to 100. And so it came down today. So no longer worried about being too far overbought on the short term. And the market gave us a little blip down. So that was something that was a big deal to me because it's one of my signals. And one thing that I've done with the high jump and the low jump bar, and I think Chris White incorporated it into his Edge Rater product, is I started to look at, can I find stocks that are at their high jump bar? So this is 100%. So that means they're the most extended that they've ever been, or at least over the last year, and then find them as they're rolling over and giving me red candle highs as potential stocks to short. So I play around with things in different programs, but I do almost all my work in HGSI. So let me close that one down. Yes, and we'll look at TradeStation or Thinkorswim for how I use those. So what I did last night is, well, let's look at the market, then I'll tell you about what I did last night, the non-X-rated version. So I always start my analysis, and since it's the end of the day, kind of when I ran this, I'm going to consider it the end of the day, is I always go into one of Ron's groups, Major Markets Plus. I've added to this the Russell, which wasn't in it, using the IWM. And I also added to this the 50, which is the Innovator IBD fund. So that's a mutual fund that's constantly running in and out the changes in the IBD 50. Since I'm a growth stock investor, since I suspect many of you are growth stock investors, if the IBD 50 is crashing, then why would you think you can make money trading growth stocks? And so I think it's a great index for what we trade. So I look at this and what do I see? Yeah, biotech got hammered today. Here's my biotech story. I've been saying for a long time that, as is everybody else, it's an ETF, right? Not a mutual fund. Sorry, Leslie. Thank you. The ETF for biotech. So healthcare, that's my field. In 2003, Congress passed some laws that said they cannot negotiate the price of drugs for Medicare. You're now hearing the left candidates saying Medicare for all. Both the right and the left are talking about negotiating drug prices. Every time this comes up, healthcare takes a hit. And last week and this week, Trump started talking about his new drug pricing plan and buying drugs from overseas where they're 50, 60% less expensive. So that's why I think biotech got hit today. As I look at the market, the S&P was a middling. It was down 0.5%. And this is looking at a 5-day window, not a 1-day window. So if I want to see a 1-day window, volatility was up, utilities were up, the dollar was up, TLT bonds were up, as was gold a little bit. And what got hurt was gas, biotech, and small caps. Small caps and growth stocks, a lot of them go together as well. And that today, that 50, one thing that what's in front of your face, it's hard to see, was down about 0.5%. So I would bet when I go and look at my portfolio that I'm down probably 2% today, because I'm usually, my beta is a little bit different than that. But that's the world I live in, and I measure myself not day to day, I measure myself by the end of the year. So I might want to quickly look at the S&P 500 and some of the other major indexes and decide whether anything has changed my hypothesis from the weekend. I've been looking at this box here. Here was a false breakdown. I'm waiting to see if we're truly out of the box or not. We are still out of the box. We're still above that 8-day exponential. At least when I ran this at, well, it's saying 403, so maybe that is the end of the day. We had it broken down. We have a little bit perhaps of a bull flag here, and it's not the end of the day for me, although I probably lost a little bit of money today. That's trading or investing, and it's not a 1-day time frame for me. If I look at the Dow Jones Industrial, again, we can put the boxes anywhere you want. I put it at the prior high, and we did have a new high last week, and we pulled back into the box. Again, I'm still above the 8-day exponential. The 8's above the 17, the 50, and the 200. I don't pay any attention to the volume bar on intraday because that'll change when I run the nighttime review. So yeah, we pulled back some. It hasn't changed my overall feeling on the market, which, as I started with by saying, I think we're in a range of risk, but I'm still have a probably more long than short. Looking at the small cap, I like looking at the Russell here, and the Russell clearly looks different than the others, but it too has that bullish pattern with the 8 days above the 17, the 50, and the 200, and its price is above or closed right about the 8-day. Now, it had a sell signal using my indicator, which I may talk about at some point. So that's a little different. Maybe that's concerning. Looking at the dollar had when I looked earlier, it didn't look like it was going to be up as much. The dollar, at least at when I ran the update right for end of day, the dollar looked like it was up a few pennies today. And you could see that the bongo weekly on the dollar actually turned red with this pullback. It's still red. A couple kahunas down here on the dollar. Maybe that tells me the dollar is going higher, especially if they don't lower our rates. The VIX moved up a little bit today, but not in a range that I'm too nervous about. Still in this here. Now, when the VIX low, look out below, meaning the market, that's when the market's probably at more risk. When the VIX is high, it's time to buy. The reality is, in my view, when the VIX starts to move up, that's when I get nervous. This complacency is not necessarily bad for my portfolio. If I'm mostly long, when the VIX starts to spike up, that's when I get into trouble. The VIX moved up a little bit today. It certainly bears watching, but it's not over. Has not gone up. It's not taken out any of its major moving averages. Gold was the best performer today, so when I find gold in front of my face, it should look okay. And you know, it's sort of a equal and opposite day as Friday. It was down today, although it said up 0.5% on the ETF, so who knows. It looks like a red bar there. Silver is actually closer into its moving averages, not as strong of late as gold. You can see it's pulled back into the moving averages. And then oil today, so it closed lower than it opened, so a red candle, but generally up a little bit day. So I don't see anything here that changes my conviction that I had over the weekend. Now I might want to look quickly at the industry groups if I can find my, and now I hit the warehouse, they pop up here. Now there's a big difference here. I think we had about 80 of them with 2-day force to the upside over the weekend. We've dropped down to 19 when I ran this. It may be different when I do my final update. Take a look at these. There's a lot of non-growth stock types of stocks in here. I mean, consumer finance, maybe plus or minus a growth area. Home builders, mass merchants, airlines, autos, consumer electronics, certainly not HGSI, high growth. Household products, marine shipping, that's not been growth for a long time. Beverages, apparel, footwear. This is a clearly defensive looking package compared to what we saw over the weekend. And if I look at 2-day down, of which I had very few over the weekend, we've moved up to 48. And some of the ones that we might be more likely to see, let's see, we got mortgage finance here, diversified banks, insurance. Those were strong, and some of them look good over the weekend, so they moved down. Healthcare, casinos, refiners, some of the things that we might be used to seeing the other way around. Now, you might be wondering where biotech is, but I bet biotech's been down long enough that it's on the 5-day group here. So there's a lot more weakness that I see in the market already. So when I do on my top-down review, since I'm still probably leaning long, although maybe with less conviction than I had over the weekend, I would typically go then into this here, 2-day up. I would right-click on consumer finance, and I would look at all the stocks that are above the index. Now, Lending Core must have been an IPO or a something, because that doesn't look very good as anything except an IPO. But let me show you a stock that I am in and then explain what you're seeing here. I am in this stock here. This is, whoops, that's the index. This is the stock I'm in. Kind of looks like the index, just not as tight. And let me just talk about what you're seeing on my chart here and why I'm in it. I am in this stock because it truly was in an uptrend and has pulled back into the 50. And you'll see me on like a broken record. If I get mobile breakouts from a squeeze, my buy signal in a kahuna, and I'm close to the 50, I buy the stock. That's just how I am. I find it on top-down reviews. The comments in the beginning about being a sucker for earnings, I look up here, and you know, there's something wrong with the stock, to be honest with you, although I'm not mirroring it. And if I put the weekly view, whoops, You see how it's been sort of killed since it was an IPO. So obviously there's something wrong here. I'm looking for a short-term swing trade. So I bought the stock in around 7. It's now at 8.3, which is a 20% move in a short period of time. I bought it because of these earnings per share growth compared to a multiple. It's in demand, which I like. And, you know, it's a little bit above the 50-day, but it's not far out of kilter for me to look at today. I put this box here. This is not the same as John's high close doji because we don't have his rules in. It's just saying, was there a doji within the last couple of days, and did I close today above that doji? And we'll see somewhere this turns green. Now, my buy signal, which has got some moving averages and some other things in it to be revealed someday, I just did it mostly because I want to understand within an industry group how many stocks are showing positive characteristics. And then today, was it good or bad? Well, today was not a good day for this group as there were 9 new sell signals. So that might make me a little bit concerned. So that was all above the index there. Home builders, if interest rates are dropping, this should be good for them. And what I typically do, let me make this big. And let me actually show you the other secret weapon in HGSI that I may be the only person that actually uses. I know that's a little arrogant, but nobody else ever talks about it except for Chris Wilson, and he did come to one of my live meetings, and I think he was surprised that I was using his little tool. So I'm setting up 2 charts here. One's going to be a daily, one's going to be a weekly, and this one's got my secret weapon on. The secret weapon is in this box right here. And the secret weapon, which was invented by an HGSI user, Chris Wilson, oh man, I mix them up, 2 Chris W's, basically looks at the relative strength of the stock compared to, in the dashed line, the S&P 500. This red line is the strength of the stock compared to the S&P. Since this thing is spiking, it tells you that this stock has, over a weekly time frame, is much stronger than the S&P 500. This is a moving average of that relative strength versus the S&P 500. And the secret weapon is, if I find a pullback to support with momentum and the weekly is crossing over its moving averages, I get excited. I get really excited because this is a stock that has some longer term moving behind it, not just a short term move. So MDC Holdings, we have a weekly high close doji today. Actually not. Yes, I have a doji and I closed above it. That's all it tells me. In reality, to be a high close doji, which is bullish, I've got to be in a downtrend. So that doesn't count. I had everything's green, a Bible gap up, a mobile breakout from a squeeze, and a kahuna. I look at it and I would probably pass, at least from my typical way of trading. And why would I pass? Because it closed at, let me open up the money box. And I got to find it. Oh, goodness. I may not be able to find it. It's sitting somewhere on my computer. Maybe it's down here. Yep, I found the money box. So it closed at 36.20. The 50 is at 32. So it's over 10% away from its 50. So it makes it a little bit harder for me to call it a low risk trade. And that's because where am I going to put my stop? Knowing Morales and Catcher's rules, I'd probably put my stop where that little green line is here, which is where the chandelier is. And let's see if I can tell you where that was. Should be on here somewhere. And I thought it's here somewhere, and it's probably again in front of my, oh, you know why? Because I'm not sitting on the chandelier, all the things come to light now. So coming down here, 33.59. So based upon my rules, I would ask myself if I put a buy tomorrow at above the high, so 36.02 at 36.30. If I put a stop at 33.50, that's $2.80 on a stock that's $36. That's over 8%. That is probably too wide of a stop for my taste. However, it's also a buyable gap up, and there are specific trading rules on a buyable gap up, and you could certainly buy it at the open and don't let it get below that mark. And if you believe Morales and Catcher and you believe in buyable gap ups, I think it's a reasonable thing. To me, I'd have to put my stock too far away for me. It's not my type of a trade. Here's a stock. Secret weapon is firing. I got a mobile breakout from a squeeze sitting right above the 50. I might put that on a buy watch to go look at later. Quick add to group. And then I have set up in my user group, every day I come in, today is Monday, and I'm going to put that in the Monday picks long, and then I'll go look down, and then I'll filter that later on. Next one is Meritage. Let me see. You know what? I did something wrong. Hold on a second. I didn't do anything wrong that's bad, but let me go back here. I got to double click on that. So that MDC was first, Meritage is second. Uptrend, sideways, kahuna in a squeeze. It's already above my secret weapon line. I don't like the earnings per share growth. I would probably pass, but this is actually not a bad looking stock. I just want to find better ones. Why is it not? Why am I passing? I'm just not convinced it's breaking out here, but it's probably worthwhile to put this onto my watch group as well. Century Communities, and I'm just looking for specific patterns. All right, now we're not looking on Thursday last week or whenever this was, the 27th, so it doesn't count. But that's what I'm looking for. Breaking out above the 50. I'd put my buy stop the next day. Obviously, coulda, woulda, shouldas. So I go through the list every day, and I go through down to the top 10, looking to see if there's anything here that's going to meet my pattern. And I'm always taking a gander. This is not my typical price point or stock that I like to buy, but I like to buy it. Why do I like to buy it? I like to buy this because I've done this long enough that I know that I've got somewhat of a double bottom in here, that I can, my stop's down here, I'm going long up here, so I've got a little bit more than I want of risk, but I feel like this one's, quote, done going down. I got my mobile breakout squeeze, my weekly bundle went green, I've got my kahuna, and here's a downtrend with a close above the high of the doji bar. Although this week isn't finished yet, it lights up here. I like this pattern. I'm going to add that to my watch list. Next one, big lots. Similar without all the fun stuff. So I'm going to skip that one. And then I get to the index. Airlines. This weekend, I called out the first couple of things I was interested in. GOL obviously had a huge gap up on Friday and is probably too late. I liked AZUL a little bit better because it was closer. I don't like buying things below the 200 unless I have a good reason. I don't feel a good reason here. Too loose. Where's that Azul? So Azul moved up a little bit and put a little doji up there, so not really doji, but a spinning top, so I'm probably not too interested there. So typically, my top-down review that you've all seen on my webinars is what I've been doing right here. So I'm looking for patterns, and I'm looking for lots of momentum in a stock that is squeezing. You know, you got that 200-day, which is huge resistance above it, so I would just move on. And then I've got this one, too many letters is some preferred thing, probably doesn't have enough volume. I don't care, I'm not interested. So I'm not going to go through all them for the essence of time, but tonight I'll go through the other 5 or 6 groups, and then I'll create that watch list. Now, what I would like to do is talk about the other approach I do, which is bottoms up. So I will work with George to put what I can of this in an add-on that doesn't include anything that's proprietary in the package. So I'm going to go, when I do my bottoms up, I'm going to go into Lavernia, Texas. I hope that's not somebody calling me, they can't hear me. I'm going to go into all securities, and now I'm going to do a bottoms up review. And so I've created some things, a new add-on, well, for me, that George can create for you because I got things all over the place. Bearish stock scans, bullish stock scans, index views, legacy views, and for today, pullbacks in an uptrend. So let's look at my pullbacks in an uptrend. Prices that break out above their chandelier stop, a PSAR near a bullish flip, and then uptrends near both free parking and those that are near the 20-day SMA. So let's talk about free parking first. So, and let me close this quick pick and just open it up here. Just give me a second to get caught up. So what I did is I said, all right, if I like trading stocks that are close to free parking, the 50-day moving average is taught to us by Ian, and I want to find them when they're in an uptrend, so I want them to be above their 200-day moving average. How many of them were in the market today? So I could see at the close of the market, or when I ran my update, there were 595 stocks above the 200-day moving average within 2% of their 50-day moving average. Okay, that's interesting. Now, how do I narrow this list down to something that's usable? So I could look at, let's start with those having a squeeze. 265 of them are having a squeeze. So if I look at Zimmer Biomet Holdings, there's my squeeze. I'm above the 200 and I'm within 2% of the 50. Now this may turn out to be an okay stock, it may not, but right now I'm more about pattern identification. All right, how do I narrow that down further? How about with the whole shamoli? Here's 3 stocks. All of them look like they're not good stocks for us, just by looking at what they are. Templeton Global is probably an ETF. Here's a closed-end fund, so I'm not interested unless I just want a sideways stock that pays a big dividend. This is one of these things that gets put together to probably go acquire somebody. Now, that's if I actually knew what this did and found out I liked the story, I don't like the fact I have no fundamentals on it. Here is a stock clearly in an uptrend that had my buy signal come in today, which are both these green things, a mobile breakout from a squeeze, a green candle low, which is a reversal, kahuna. This actually is interesting. If it was a stock that I was actually a tradable instrument, I don't know what this is, and I don't think I want to, it's anything that I would touch. It is a blank check company. I don't buy blank checks. I give them to my wife to go buy things. And then how about if I'll push that down one? Let's look at just mobile breakout, squeeze, kahunas. And so I'll go through and try to see, are there any things here, here's that Zimmer Biomet Holdings, that are tradable. So I will go through, and I'll probably look at this one because I can look at 21. Now, of course, just looking at it, I see a lot of things that we can't buy, but let's just go take a look at them really quickly. So sideways, it's been sideways forever. I probably would pass on it because it's sideways. MI Homes, I think we already put this one on the list as being interesting. Breaking through here, mobile breakout from a squeeze in the right parameters, does not have a kahuna, but I would probably go ahead and add this. I think I already did, but I just put it there again. Care Trust REIT, I think this is going to look good. Uptrend, sideways. I got a mobile breakout from a squeeze. Bongo hasn't turned yet. It's got a weekly buy signal. It's about to do the magic indicator. I'm going to put that on my buy watch list so I follow it. Pulte. You know, again, no kahuna yet, but it's certainly setting up here. Let me see if it makes any money. Earnings per share growth kind of tepid, but this there's some teaching opportunity on this stock. So first of all, you notice that several of these are repeats because they were in the top 5 industry groups. So that's a nice thing to see, that there's some relationship between what works in the top down and the bottoms up being similar stocks. But this is one that is my get on a plane trade type of a stock. Now, it is missing some momentum. I'd rather find the kahuna or a pocket pivot. But here's why I call it my get on a trade plane trade. So let me just do this real quick. I just did not want to do that. Hold on a second. That's what I wanted. So this is why would I do that? Because let's say that I have a job, and let's say I like this stock and I want to trade it if it goes up tomorrow, if the interest rates drop, home builders are strong. So here's what I do. I like my trading style, and my trading plan says, I just got to find where my mouse is, that I like to buy these stocks if they take out the PSAR dot, because then I know that it's caused some people in the world that follows the Wells-Wilder PSAR trading system to go long. So that PSAR dot is at 32.87. The stock closed at 32.32. So I would put a buy, say, at 32.90. Okay. I would put my stop. Oh, I love this one because it's sitting on its 50-day moving average. The low of this day was 31.80. The low of this day is 31.72. I'll take the lower of the 2 days minus a nickel. So I'm going to put it at 31.67. Therefore, I'm risking how much? 90 plus 33, $1.23. If I'm willing to risk $4,000 per trade, I can do 4,000 divided by 1.23, and among friends, I can probably buy about 3,000 shares, assuming that I have capital. The reason why I call this a get on a plane trade, because I am setting a buy stop. Now, I could have gone shorter, and I'm just doing this for example, so it's not perfect. I'd rather it be closer. I know where my stop is. I know that the risk is 4%, which I can handle. and it allows me to buy a lot of shares. If the risk was $3, I could only buy 1,200 shares. So the lower the risk, the better. I take these trades all day long. I have my order form at TOS or TradeStation, has good till canceled. I put them on at night and I look at them the next day and take them off if they don't work anymore. But I like this trade. Again, I'd rather see some momentum, but I'm not going to get this trade filled unless it moves up. And if it moves up there, I'll probably get a kahuna firing. And oh, by the way, what happens to this trade if the market opens up down 300 points tomorrow? The stock opens up down here and I don't get filled. It's a safe trade to make, and that's why I like it. I'm going to try and stick to stocks if we have any more stocks that are here. Toll Brothers, you know, how many home builders do I want to put on my list? VF Corp, consumer discretionary, apparel and textiles, kind of sideways, not really doing much momentum-wise. Brixmor Property Group. So when I see a REIT, my BDIs go right to this thing here, 7.6% yield. It's a sideways stock. I'm not that excited except for the yield. So I would go through, there's that, that's nothing. All right, looks like we're getting junk. All right, so that was one of the scans that I'll do at night, and there's nothing proprietary in that scan, so I can work with George to start to build out my my smart groups and my add-on. What about uptrend near 20-day SMA? You might find more of them because this has been an uptrending market. So let's see what we have here. We have a lot of things. Well, I'm not going to look at 1,100 different stocks. But let's do the same thing. Let's go to where the money is. And let's look at the whole shebango. Same damn three stocks pretty much, two of the three. So let's go back out of this and go to squeeze, global breakout in a squeeze. I've got 39. Let's take a quick look. Bingo. All right, this is my, right away. I don't need to look to the, am I in an uptrend? Absolutely. Am I crossing the magic line? Absolutely. How do I set this trade? Now, this is a tougher trade because 8% risk on a $350 stock is $28. So you're going to have a wide stop here. So you're probably not going to be able to buy thousands of shares. But let's just take a look. I love this stock. It's setting up. Its earnings are not to August. So we have a PSAR dot was at what? $357.33. It closed at $352.69. I'm going to probably set my stop at the I probably put a buy at 353.25. I might buy half my position there, and then if I'm right about it going up, I buy the other half at 357.50. Where am I going to put my stop? Right. So the downside is I have a really tall bar here, so there's a lot of dollars here. The low there was 343. The low here was 343.33. Here is 343.33, 341.21, 338.25. So by my rules, I would either put it at something that's a clear-cut reason for a stop or the lowest bar in the last 4 days. It stopped on the dot on the 50-day the last 3 days. The 50 days at 343.80. I want to be out of this stock if it's 343.50 because it's broken my reason for the trade. And let me show you how I deal with the stops too. Because remember I said I'm a working man. I'm willing to risk 4,000 shares. I've got $14 risk on the second tranche. So what can I buy? 400, 300, I can buy about 300 shares. So I would set, and I will set before I go to bed, in order to buy 300 shares of Alta tomorrow at this price. Now I'm going to come back and I talk about how I'm going to trade them. Just to warn you, my guess is we're going to go to 6 o'clock if that's okay with you guys. You can get off anytime. There is a recording if it comes out. So that's the second one I found. So let's go back and look at charts. I'll talk when I see something that's worth talking about. Here's that Care Trust REIT again. 3.5% dividend, about to cross here. I'll put it on my watch list. Pulte's already looked at. Penumbra. The other thing is I'm going to look at average volume. I don't like things that don't have any volume. This is sideways and loose. I remember the old exercise we used to do with Ian. Tight, loose. All right, here's a winning picture. I just don't like buying Kimberly-Clark at these prices. If you think the market's going down, here's consumer staples, so it's defensive play, plays a 2.9% dividend, and you basically, okay, I guess that's not me, so I'm not going to pay attention. If I wanted to, I could say that kind of that we sort of broke out of a flag, and this is very bullish. Got a mobile breakout from the squeeze. We had two kahunas. Everything is green. This is not a bad looking trade right here. Sideways breaking out. The only thing is it's a stock that it's expensive, and staples are boring to me, but in a bad market, this might be another one. So notice how, even though it was a bad day in the market today, we're finding stocks that are buyable. We've skipped this before, I'll skip it again. Black Knight Real Estate Services. Yeah, no dividend, which sucks, excuse my French, but I got a stock in an uptrend sideways, had a PSAR reversal today. Mobile breakup from a squeeze at Kahuna. We're above the magic line. I think this one looks great. Not as excited by it as I was Alta, so I'm throwing it on my list. Templeton Global again. Another bond fund. Another Toll Brothers. Same stocks over and over again. VF, anything here that I want to look at? Wix. These are ones that I get nervous about because they don't have earnings, but it's probably because it's building infrastructure. So I'm going to pass on that. But I think I've got a scan here that I created yesterday in 3 minutes that helps me identify the pattern of stocks I like to buy. That's why I love HGSI. You did hear the 3-minute piece. All right. So that was the 20-day. What about looking at PSAR near a bullish flip? This is an old thing that I did. And what I found was, go back to Lulu, that before stocks would move, if they'd flip their PSAR from bearish to bullish, from green to red. And that I could then look at thousands of stocks, which I did, and determine what was close and what was within the move of the next day that's going to trigger that from a sell to a buy. And I just created a scan around that, which you have already, which is my PSAR close smart group. So obviously 56 we could look at, but let's throw mobile breakouts and a squeeze on them. There's only one, so let's throw just the squeeze. Gets me down to 25, and let's just look at the first couple of them here. Murphy USA, not the world's best energy company, a refiner, sort of in an uptrend. It's too loose for me. Skip it. HCP, medical REIT. It's got all the parameters I look for. It's about to flip a mobile breakout from the squeeze. Had a kahuna a couple days ago, just broke above the magic line, 4.5. Certainly is in an uptrend, and it's probably worth putting on a watch list. Petrobras. This one just came up again, as did this. I'm just not, these aren't tight uptrends that I'm, but I've already found 2 stocks. Sometimes I don't find 2 stocks on a night. And I'm picky because it's my grandchildren's who's not born inheritance that I'm risking. All right, so that's enough of that. And then back to my warehouse view. And we could look at price move above a chandelier stop. So I have 137 stocks, and these, by definition, let me see if I can make this bigger. The red, yeah, this one did not format right on the chart. Oh, yeah, it did. Sorry, George, I was blaming it on you. Stop, 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 above, and now stop is below. Obviously, that had a big run, so I'm not going to comment much about that one. But so that's what I'm looking for here, stocks that break above a sell signal, and let's put a squeeze on them in a mobile breakout and see if there are any. 3. Uptrend, sort of a cup, right side of the handle, the cup, no handle yet, above the magic line. Everything is green, mobile breakup from the squeeze, the group is strong, has a kahuna. Surprised it doesn't pay a dividend, that goes on my watch list. QD, this one I already have, that's simple. IDACorp. Yeah, not as exciting. So I could back down on my filtering and just do squeeze. And I've got 44. Anything here that's we haven't looked at today? Yeah, it's too low in its pattern for me, Virtu Financial. Now, I haven't been able to create a scan, and I don't think it can be done in HGSI. Maybe now George is seeing how I use it. He can reevaluate. All you'd have to do, George, is on a stock, calculate the relative strength versus the S&P, and then what the 10-day moving average is, and then are you above or below? And Sagar, if you're on, can your programmers do this for me in TradeStation? Because I think that there's something to Chris's signal. So what I've now done is I've gone through, I found 2 stocks that I'm interested in buying, and I created a watch list. So I now have a small list of stocks that over the night, as I do my analysis, when I actually have end of market data, I will now play with these. So here's what I do. Now I'm going to go out of HGSI. I'm going to go into TradeStation, into what I call my advanced screener. And George's dog. All right, add new page. And I'm going to call this Monday. So I just copied a text list from HGSI. I'm pasting it into TradeStation. And let's just see if any of those. Now, I didn't put Lululemon in there. Oh, I didn't do that, did I? Okay. What was the first one? Was it Pulte? It was one of the home builders, Meritage. Okay. So here are 3 time frames. I did buy CMG today. Let me just show why. Not just because it went up, because everybody knows it went up by now. CMG made my watch list, and let's just look at it. Would have made it again today, but this is on Friday. I had a kahuna, a mobile breakout from a squeeze. I was just below the PSAR dot, mobile breakout squeeze. Today you can add a pocket pivot and another kahuna, and it has the weekly bullish doji reversal that showed up here. And let me show you that on the chart here. And I guess it didn't count because it was in an uptrend, but here was last week doji, and then today we closed above that doji. And in TradeStation, the reason why it has not changed color, and it will get orange when it's a high close doji, is TradeStation won't let it happen until the end of the week. So it's got to wait for the bar to close. So I will look at real quickly, see if anything's look good to me. BKI, so just to give you a little bit of a glimpse of my craziness, I've got, this is John Person's buy signal, the arrows. I've got auto driven trend lines. I think this comes from Cigar's program. Here are my combined dots. There are 7 dots. The top dot, which isn't here, is a Bible gap up. Then I have a pocket pivot, which is this one. Then I have mobile breakout, squeeze. Am I above or below the PSAR dot? Kahuna forces, and red candle high, and green candle lows. So I have all my HGSI signals in this little combo bar. So uptrend, sideways, breaking above that today. That's interesting to me. I would look at Cigar stuff, and I'm not going to educate you on this stuff. It turned blue. I think this looks very interesting. So I might work BKI up further. A quick aside, I emailed Cigar and said, was his offer closed or not? I don't think it's closed. On the HGSI site, you should see a link for me. You have to sign up for a free trial, and then you then email me that, and I'll send it to Cigar, and he'll change your 1-month free trial to a 12-month. Obviously, it doesn't compete with HGSI. It's an indicator set for TradeStation. BKI is going to go on my worry more about it later. Let's look at CTRE. I've got resistance overhead, trend line. Let's look at Frontier. I like it. I liked it before. Why do I like it? I got a new person buy signal both daily and weekly. I pulled into trend line support on the weekly. I broke above trend line resistance on the daily. I've got all greens here. This thing here is the bongo. The weekly bongo is still green. That's the only thing, that daily, weekly, and monthly on this chart. And I got 3 time frames are in a buy on John Person. I like front line. I'll look over on Q charts. And, you know, from what I've learned from Q, the concern here is you're going to have some resistance right here. But could this run up $1 on an $8 stock? So give me a quick 10% move. Yes, it can. I think front line looks interesting here. HCP is probably more boring, remembering the chart. Meritage, got to get above resistance. That was MHO. This is MTH. This is Meritage. This red dot is, I believe, is showing that it's got some MACD divergence. So I'd have to go look at it in a different program. But I've got above trend line support. I'm in an uptrend, and I'm going to go look at it in Q. Broke above resistance, could certainly run up to here, breaking above resistance here. I think that MTH looks interesting. PriceSmart was one of these bottom dwellers, and the problem with bottom dwellers is you always got resistance right ahead. 10% move is potential there coming out of a squeeze. If I look at it in Q, we're right by resistance, but you know, you could get a 10% move up to the low 60s. Pulte home hasn't fired yet. And then the one that I really liked was Lululemon. My wife and I have a long-standing joke, Lemon. High close doji on the daily, pre-PS buy, PPS buy, no red down here. This tells me here that it's below. The PSER hasn't triggered yet. You should remember that we saw that on the HGSI chart. Isn't it neat how I can tell you what the HGSI chart looks like from those little bands? And on Q, we're going to move up. And even, I feel good. There's going to be some resistance, but coming off of support, I like that. Now, let's do the next thing that I wanted to do, and what'll take probably 10 minutes. And if you don't do options, you don't need to stick around. I'm going to close off my TradeStation. And I'm going to talk to you about how I'm really going to trade Lululemon, and then we're going to finish. Yes, I know it's Lululemon. I've been joking with my wife for years. Actually, the big joke is I finally bought some of their pants. I love them. I used to pick on my cousin because he used to wear them all the time. I love them. They're the most comfortable things for traveling. And when I don't have to go to a fancy meeting at work, I even wear them into work now. I got multiple colors. All right. You can see I was working up CMG last night. So most of you don't have this program, and I'm certainly not saying that you need to go out and buy it. It's Options Pro and VectorVest, but for those that feel the need to spend more money, dynamic trend. This is the guy, Joseph Arnold, I think, or Tom Joseph rather, who did Advanced Get. And this is his program. You can buy it without being a VectorVest owner. It's got some really cool stuff, a lot of which now available with brokerage integration. I didn't know that. It's a very robust options product. I like it for what I'm going to show you here. I want to figure out what's the best spread on Lulu to buy. And I can do things here that I can't do easily. I'm sure you can do it in Thinkorswim. I'm just not that good at it. So just to remind everybody, we were bullish on Lululemon. We had our buy set point. We had a stop, and I could buy 300 shares risking 4,000, and 300 shares of a $353 stock is probably $100,000. That will tie up a lot of your capital. So let's look at the bullish options. Options meaning bullish opportunities. I could buy a stock, I could buy a call, I could short a put, I could do a bull call spread, a bull put spread, I could do synthetic. I'm not going to short anything. So those are spreads. I'd be looking at least at an August time frame. I'd have to go and verify when earnings are. I'd probably want to do this and be out before earnings and capture the run up into earnings. Since it's such an expensive stock, I'd be looking at a minimum range of things of $10. And the starting price, wait, that couldn't have been, wait, that was Ulta, not Lulu, right? All right, now I'm feeling stupid. Ulta, all right. Minimum price, $10. Okay. And now I got to go look at this because I feel like an idiot. And my wife would say, so what else is new? Hold on, folks. So I think I liked them both. But the one, so Lulu, yeah, I liked them both. Lulu looks good. But the one we're talking about here is Ulta at 353. Sorry for the confusion. I'm getting hungry. My wife gets hangry. I just get stupid. All right. So here are several potential options plays that I could make to trade Ulta. Now, if I bought the stock, all right, if I bought 100 shares of Ulta, it's going to cost me $35,000, $35,269. So let's buy 100 shares. And let me introduce you to this chart because we're going to compare some things and show you the actual trade I'm going to take. So if I was to buy 100 shares at $352.69, which is the current price, my maximum risk is going to be $35,269, goes to zero. My profit, so as price goes to the right, I get more profit. My maximum profit is to infinity and beyond, Toy Story, all right? But I got my risk and my cost of getting in is $35,000 to control 100 shares. It's not my trade. I don't like that trade. Too much money to go into it, and I'm not controlling enough shares. How about if I buy a call? Sorry about that. Let me try that again. If I buy a call, I'm paying to control 100 shares at $350, which is sort of at the money. I'm going to pay $12.80 a share. So to control that same 100 shares, I'm going to pay $1,280 versus $35,269. My gain is to infinity and beyond. But you notice it's got to move a little bit. It's got to move the $1,280 I spent to get in there. It's got to move before I start to make money. So the call, the long stock, I make money on the first dollar it moves. On the call, I don't make money until I cover the cost of call, or $12.80 a share. On the stock, my risk is 100%. On the call, all that I can lose is the price of admission, the $1,280. So it costs me less to get in to control the same 100 shares, and my risk is much lower. Now, obviously, I'm not going to buy Ulta and it goes to zero the next day. But the point should be clear. By using an option, I can control the same amount of shares for a lot less money. What are the negatives? And there are negatives. Stock goes down in price, I lose money. 3 months from now, it goes to 400. I still own the stock. I made money. Your option expires worthless on August 16th. So there's a time component. You have I have to go up $12 to be profitable. So you have a price component of risk. And then you have the volatility that there's a volatility that helps in the pricing. And if the volatility goes up, the option's worth more. If the volatility goes lower, it's worth less. And as you get closer to expiration, the volatility becomes worth less and less and less, and you end up having an option that loses value every day, even if the stock stays the same. So there's pros and there's cons. Now, what about, I'm just going to sell a put? Probably the best option for highest likelihood to make money, and the worst option for making money that's meaningful. Why? Because if you sell a put at $350 and you're betting that the stock stays above 350, and since you're going to get paid essentially $9 a share to sell that, as long as the stock is above $343 $1, it's a 350 strike price, you're going to make money. Now, the good news is that the stock can drop in value up to the price of your premium that you put in your pocket, and you still make money. The bad news is you have the same maximum risk as buying the stock minus your credit, and your profits is just the amount of money you put in your bank. Now, to me, on a bullish move where I want to make money, selling a put rather, is not what I like to do because there's no growth in that. But I'll tell you, the smartest people in the world, all they do is sell puts, because you design them so they're high likelihood that they expire worthless, and every time it expires worthless, the premium is yours to keep. Now, just for completeness sake, a bull call spread says, I don't want to spend that much money to get in the position, so I'm going to buy a call and get some upside, but then I'm going to sell a call to offset the cost of my call getting in. So what essentially happens is I'm now spending $5 to cover it between 350 and 360, so I have a gain of 10. So let me change that a little bit. Let me give me a little bit more gain. Let's make it 365. Okay, so I'm going to pay $7 per share, and I get, if it goes above 365, I get $15. If it goes to 360, I get the difference between the closing price and the strike price. If it goes below 350, it's zero. But the advantage of this one over this one is I had to pay $12.80 here, and I only have to pay $7 here. So my cost of getting in is better. The most I can lose is the premium, which is $12.80 here on buying the call and $6.95 on the call spread. But the problem with this trade is I could have been right on the name of the stock, the direction, and could knock it out of the park. And all I'm going to make on this trade is I'm maxed out at the $805 where I had infinity here. So that's why I'm not a big fan of this if I'm very bullish. But on expensive stocks, this is a way of playing and reducing your cost. I could do a put spread, and the put spread, basically it's capping my gains, but it's lowering my risk because I'm buying a put that's out of the money so that I don't have infinite losses. So I'm getting paid $3.50. I'm short the higher price put, long the protective put, and I'm paying $3.50 to do that. The most I can make is the $3.50 per share. But the good news here is the most I can lose is $6.50. So that becomes perhaps a higher probability win, lower risk, and that probably works for some people. Here's how I play it. And those that are real traders out there are probably thinking this guy is a risk taker. Well, this isn't what I'm doing. I'm just building the story. Take a look at the two risk curves here. I'm profitable on $1 on this one. I'm profitable on $1 on this one. I'm negative $1 on $1 behind here. I'm negative on $1 there. The exact same risk curve. To buy 100 shares here, it costs me $35,300. To buy or control 100 shares here, it's going to cost me $353. Or $385, I'm sorry. Would you rather spend $35,000 or $385 to have the exact same risk curve? I'm going to raise my hand and say I'd rather pay 385. I got the same infinity upside, and I've got the same downside. The problem with this trade is we're human, which means we're stupid. And because we're human, we'll look at this. I'll go back to that piece of paper and it says, I can risk $4,000 on this trade. I'm spending only $385 on the trade. So I can buy 10 times 100 is 1,000 shares instead of buying 300 shares. And it cost me only $385. That is the risk of taking a position that you are otherwise not able to handle, and you have the exact same downside risk. You got to have a huge margin account. This is how I entered my Amazon. It's how I entered my CMG. I don't recommend it for those that can't accept the downside. I certainly would be careful on how big of a position you take, but let's show you how I can make this a little bit safer on you. What if I was to buy a $340 put for protection? It's going to cost me money. So here's the trade that I like to take. I now have to move to make money. Why? Because I have to pay $9.30 a spread. I have 100% of the upside, but I'm risking $10 per share to the downside. That is what I used to refer to as the chicken shit Jeffrey option combo spread. Somebody said it's some type of a broken wind butterfly. I don't know options like that. I only know calls and puts and the few things I do with them. But that's how I'm going to trade Alta tomorrow. I don't want to tie up any more of my margin dollars. I tied up enough of it yesterday. I'm not seeing any questions in a long time, so I hope people are still on. Have I gotten a message from George that I kicked off?
Nope, everybody's there.
Okay. And so you tell me, how do you want to trade Alta tomorrow? This is my trade. The trade will kick in when the stock hits my buy price. It will probably cost me a little bit more money on the call because the price will be a little bit higher than it is tonight. So I could actually go into the program and adjust it. And now let me just tell you what I really created here. Forget all the fancy names. What I just created there, and I've never seen anybody call it this, is I just created a synthetic call that has a lower cost of entry, has an infinite reward. Since it has a lower cost of entry, it doesn't have to move as far to be positive. And my maximum risk is a little higher. So I'm going to pay for it on the downside, but I'm profitable quicker. And that is how I look at my option trades. And now I'll disclose profitability. I had a bad day today. Whoop-de-doo. That's within my usual days. I started the year with $1 million in my account. I am up on that. You'll notice I have 1.8. Well, I've had some money flow changes. I sold one of my boats, and that added some cash into my account. But that just happened. I'm up even after being down today over $500,000 on this account this year. When I look at my actual percent, it's about 50%. The strategies work. Buying pullbacks and uptrends work. I didn't. The trades I made today was a CMG trade. I didn't make a whole lot of other trades today. And of course, CMG had gap before I got in, but I didn't lose money on it today. I think that the best way to make money trading is swing trading. That If you learn options, you will be a better trader because you can define your risk and your rewards better. At least I think you can. And now I'll answer any questions. Now, hold on a sec. Before I do that, I want to ask a poll question. Never mind. I'll just screw it up if I do it.
Give it a try, Jeffrey.
All right. So I am thinking with George of doing a live session. And so the question is, would you be interested in attending a live event in Pittsburgh, West Palm Beach, or you have no interest? So pick, if you want to come to a live event, pick your location. You know, I used to go twice a year to Ian's meeting. The content never changed. It just got better. My content's pretty much similar to what you've seen here. We could invite Ron Brown and maybe George Lee, and I could see, so 2/3 would come to a live meeting. And unfortunately for you, George, you're coming to Florida. I'm going to stop that and see one of the couple of other questions I had before you ask your questions. And my wife takes the time usually and gets mad at me. How are you doing this year? This is anonymous, by the way, just to show how you might be doing compared to the averages. Well, I'm glad to see that most of you are flat or above. This has been a really strong year in the market. But I think, you know, I shouldn't be the only, you know, there's about 10% that are greater than 30. I think I have a strategy here. Yeah, okay, I'll answer that question in a second. That actually works for me and makes sense. And how many traders do you know that will actually show you their account balance and their P&L year to date? And then just out of curiosity, what's the Fed, what do you think the Fed's going to do at the end of the month? Yeah, I'm with the majority. I think that Powell hates Trump, and Trump's been on his case. I think he leaves it unchanged, and I think the market sells off. So I'm going to be thinking about managing my portfolio with that expectation. Let me go through the questions before my wife starts screaming that it's time for dinner. Because I guarantee that's, well, actually, let me ask one more. Let me ask one more. It may not work. All right. Just a curiosity of who we got. Do you own HGSI? Yes, no, or no, and I'm on a trial. All right, so the vast majority are users, not a shocker, 10% or not. Free trial, I get nothing for your trial. Why do I pump the program? Because I use it and it works. Let me go through the questions that I have here. What dates are you considering for the live workshop? I am considering so John Person, if I do it, I'm going to do it back to back with John Person. And John Person's seminar is August. His seminar is the 31st of October and the 1st and 2nd of November. I will either do mine on the 30th or the 3rd. The only wild card and why I'm not putting anything out for you to sign up yet, and frankly, I'm going to let George have the meeting and just pay my fees, which I don't get paid for doing anything except my cost of flying, which is not really, because I don't want to deal with the tax issues and tracking people's money, is the Traders Expo in November, I believe, is the 8th, 9th, and 10th. So I am in the process of talking with George Lee about doing a meeting in Vegas on Monday, Tuesday, and Wednesday prior to the Vegas Trading Expo. So I should understand very quickly which one of those I'm going to pick. And it may be both because I could give the same material. So here's some of the questions. Am I using Zoom video for the webinar? I think he uses, do you use Zoom or GoToWebinar, George?
Go to webinar.
Which is very similar to Zoom, which has been a great stock. Can you give us the settings for the magic formula? It's very simple. Relative strength of stock or anything else versus the spider. And then a moving average, let me make it even easier, SMA of 10 weeks, because it's on a weekly chart, of this relative strength ratio. And I look for a move above or a bounce off and higher as being positive signs. If somebody wants to return all the hours that I give you guys for free and don't sell you anything and can program that in TradeStation or Thinkorswim and send it to me, I would be very appreciated. And maybe George could see some enthusiasm about it, see if they, I've talked about it, just they think, and I understand it might be a lot of programming. Do I use AIQ? Yes, not on this machine. Why? Because AIQ is an interesting top-down program. AIQ looks at industry groups and sectors. AIQ has that ER buy and sell signals. But here's what AIQ doesn't do. It doesn't, its charting platform is from 1990. It doesn't have all the indicators that I use. And I can't trade without using the stuff that I use in HGSI. I have had the indicators programmed in eSignal, in TC2000, in Thinkorswim, TradeStation, and I think even Metastock, although I have to go find them. But at the end of the day, the best program on the market that works the best for me because of the top-down and the integration of the charting platform is HGSI. There's no question that Cigar has some very interesting tools outside of what I showed you that look at a top-down approach, but they require you to have Metastock as a data feed. I'm going to talk with George once I get done with the first add-on and the unnamed guru who I'm trying to work with to have the first non-Ian guru add-on, or Ron or Jeffrey or Gil for HGSI. Sagar has expressed a willingness to let us create one within HGSI. It may be too complicated, the math, but we're going to wait and see on that. Again, I will put up Sagar's stuff in the board again tonight. Just run it through me. It's a free trial to any of his tools. Since nobody I know has Metastock except for me, you're going to get the TradeStation add-on, and you'll get it for a year, and you'll see exactly what I just did. I find the stocks in HGSI with scanning and a top-down review, and then I look at them in TradeStation, and then TradeStation is going to love this one. I set my parameters, and then I buy them using the Thinkorswim app on my telephone, which is the easiest way for me to trade. There will be a video, it will be posted. Thank you for putting up with me for 2 hours. I think I got everybody's questions. Thank you, George, and you all have a great night.
Thanks, Jeffrey.